In high seas or calm, both opportunity and risk lurk just below the surface. Answers require in-depth analysis. Welcome to BlackFin Group's Shark Cage podcast, where experts dip below the surface of important industry issues in search of hidden opportunities.
Good day, folks, and welcome to the Shark Cage BlackFin's podcast series. My name is Keith Kemp, President and CEO at BlackFin. I will be your host today. To start, I want to thank our sponsors. A special shout out to all of BlackFin's preferred partners: MortgageFlex, Constellation, Mortgage Solutions, Flowify, Cloud, Virga, LendingPad, IE Mergent, and many, many more preferred partners, all of which are doing great things for the mortgage industry. So let's get started here today. Today, I'm excited to have in the Shark Cage our newest preferred partner at BlackFin, Jay, who is with the co-founder of Prudent AI. But just before we get into today's discussion, let me formally introduce Jay by sharing a little bit about his impressive background. Jay is co-founder of Prudent AI, a smart lending decision platform built for mortgage lenders. Jay is a CPA turned data scientist, and he spent over 9 years at Ernst & Young. Now, at Prudent AI, he and his business partner, Sri, saw an opportunity to begin transforming the mortgage services industry using AI, all of which we'll dig into here in just a couple minutes. Jay, so glad to have you here. Really looking forward to our conversation on really what's the hottest topic today, AI. So welcome.
Morning, Keith. AI is indeed the flavor of the season. And we're very, very happy and excited to be working with BlackFin and to be on this podcast.
Yeah, well, we're excited to have you here. I think a lot of people are going to benefit from your perspective and especially your AI expertise based on all of your background. So really, really do look forward to getting into that. So with that said, I'll go ahead and just kind of tee up kind of the initial question that comes to mind for me. Make sure I couch this correctly, but as AI experts, Jay, can we start by you just kind of sharing in general terms what the state of AI is globally, not necessarily specific to the mortgage industry, but are there any myths around AI that need some explanation, or are there some things where we need to separate some fact from fiction? Yeah, I mean, we see the headlines. I see it almost every day on CNBC, where they're talking about AI and different, stocks and how they're popping based on their AI integration. But is it more hype today than it is reality, or is it more reality than it is hype? What say you? What's your perspective on this?
Sure. We are in the middle of it, so I'm definitely qualified to have a point of view on that at least. So I think there's always a mix of hype and reality, and especially with news, there is a bit of hype. I think AI in general is a very, very powerful technology, and it's kind of almost like electricity. It's the metaphor I like. It's as powerful as and neutral as electricity, and you can do fantastic things with it that you couldn't do before till you had it. And as a technology, that is something that I'm very excited about. But having said that, right, there are the media impression of AI sometimes always gets carried away by the hype cycles. And for example, there's a lot of news today about generative AI, ChatGPT, all the different image generators. Those are fantastic, but they are very creative. Sometimes they may not have like a great use case in a traditional industry like mortgage lending. And so I think the hype sometimes typically comes generated by the media and social media, but I think as a technology, the foundations are very strong for AI, and it's not something that's going to come in and go away the next 2 years as when the next new thing comes along. It's going to be here for a while.
It's not a trendy thing. People are just trying to figure out what the real world application is through tools,
Yes.
kind of like a Prudent AI, and where they're needing thought leadership to help kind of frame up how to best use AI through a specific tool.
Yeah, that's true. That's true, right? So when the technology is summarized into like a single line or a tweet, you can't really capture the essence of it, right? It's kind of like where any future impression of any future movie or any impression of the future in Hollywood always has flying cars.
Yeah.
It still does. The cars aren't flying, but we are into the future.
Yeah, that's a great analogy. No, I appreciate that. And even I get a little overwhelmed with the chat GPT because I'm trying to figure out how do I leverage this in order to produce more efficient content or more efficient marketing, or how does that, there's just no blueprint or footprint for modeling or where to go to use these different tools. So it can be pretty overwhelming for any lender to try and make sense of it all in trying to figure out where to plug in AI or how to plug it in. So is your sense that, yeah, particularly in the mortgage industry, because it's so sophisticated and there's so many moving parts, so many micro components. I mean, I always say, if anybody's been listening to my podcast long enough, or these podcast series, they know that I consistently make the comment, there is no more sophisticated transaction than the mortgage banking transaction in the US. It requires the most data points in order to complete a transaction in the world. So it really is fairly overwhelming for lenders to try and figure out how to put together a blueprint for their organization to give them that secret sauce. So is it more appropriate for lenders to be thinking, a little bit more in crawl, walk, run stage? And, the run is when somebody brings a tool for you, the walk being like a Prudent AI, or the walk stage being, you're starting to apply it to some marketing, efforts and strategy, content development, and the crawl being just really kind of in the research phase to figure out where it's going to best fit for your organization. I uh, did I go off on a tangent, or does some of that make sense? And would you compartmentalize it that way as best practices advice for a lender?
I would actually do it differently. So
Okay.
I used to be a data analytics consultant, helping clients and companies worldwide figure out their data science strategy before I started Prudent AI. So I've been in the space for a while. So one of the things that I always ask, both on behalf of my clients and ask clients to ask any AI technology they encounter, is what are the outcomes I'm looking for and what am I getting out of it?
Mm.
I think that's fundamental. But the technology itself is sexy, but the important part is what does it specifically do for me? And and because AI as a technology is not black and white, like software is black and white and rules. AI as a technology is different shades of gray, and then you pick the one that works appropriately for you. It's very important for the lender or the buyer to make that call. You because they know their industry and their domain and the precision best. Because when you were talking about mortgage industry being a very sophisticated transaction with many moving parts, one of the key features is it's also a very high precision. There are rules and you cannot break them. The rules are hard and
That's
you got to get it absolutely right. And that precision is very important for you to keep in mind when you're using a technology like AI, which is foundationally based on probability. So it is gray by design. So you are in a black and white world. You're getting a powerful technology that's gray. You need to know how to mix it in.
I like that. That is a really good, great way of framing that up, just in general as to how people should be thinking about AI. Thank you. That I love that perspective. Um, so now let's transition into zooming into the mortgage industry. And I mean, you obviously have some very impressive clients that you're working with in the mortgage space. So you know from where you speak. So what AI trends are you seeing as we zoom in here? What AI trends are you seeing in the mortgage space specifically that a lender should be looking for now, or to know if an AI tool is or isn't more hype than it is substance?
Sure.
What questions should lenders be asking, building on your earlier comment there, to vet out, whether someone really is offering something AI or is it just AI is in the name of the company?
Yeah, there are a lot of people with AI somewhere in the name of communication who are doing very little of it. It's true, but I think the key question is how does it handle uh, gray areas, right? So, for example, in our world where we are actually analyzing data and making decisions on it, you need to have good answers on what if I what if I have an edge case or a corner case where the general rules don't apply? How does your system handle it, right? If it handles it well, then that means it's kind of sophisticated AI. If it says no, we don't handle that, that's usually like a very clear tell that it's actually rule based, which is software.
Hmm.
I think the big tell is in how it handles edge cases. It's not always that it needs to give you like a precise answer, but it needs to handle it well and gracefully.
Well, I like that. Handle it well and gracefully, and to help guiding. I mean, we keep talking about efficiency gains within the lending process as a result of AI, right? And I know that's why clients are drawn to what you're offering because of that, that you're taking multiple steps and merging them into one efficient, couple seconds as opposed to several arduous, steps in a process. So they need to be looking at, so so part of what I'm hearing you say is the real substance is what is it eliminating in my process, uh, in helping automate because those rules are so hard and fast. Did I hear that correctly?
Right. So what does it help automate, and how does it work around? So there are hard rules and there are soft rules in any process, right? So how does it handle both of them well? I think is key. Typically, traditional automation will handle hard rules reasonably well with effort. AI comes in because it can also learn the soft rules and the nuances on top of the hard rules, and also have a learning curve, which means with use, the software gets better and better and better in handling your soft rules.
Hmm.
I think the standout feature for AI is the software can learn and correct itself over time.
I like that. Are there any specific trends you're seeing in the mortgage space when it comes to AI? I mean, or is it still too soon to tell?
No, there are definite trends. One of the things we see is that there is a lot of value in applying AI in the front end processing of documents, gathering all the documents together. Work which has a lot of manual effort going in today, but which is still very high value and high precision. I think there's a lot of use case for AI. We see companies that are doing really well, putting a lot of effort and dollars into it.
Hmm.
And I mean, we are one of the providers who offers that, but the industry definitely focuses there. The the other side of it is that there is ChatGPT, which is very generative and creative. And I think the use case today for the industry is almost entirely in just marketing and sales. But because of how powerful the hype around ChatGPT is, I think there's a lot of effort and dollars going into trying to make it do everything, which may not be the right fit for this industry because it's more a creative technology. And what this industry needs is actually almost a high precision technology. It's you don't want to be working creatively on making underwriting decisions. You want it to be very precise.
Oh, there are some lenders today that want more creativity in their underwriting, right? But no, you're absolutely right, and I love that. It's a creative technology, but you have to make sure that it has the precision decisioning. I think that is a great caption right there. So you barely started to touch on this, but let's drill down just a little bit deeper. Let's talk about how Prudent AI is delivering that kind of precision and creativity, the creativity of the platform to deliver precision decisioning within the ecosystem of lending. What are the benefits gained through a platform like Prudent AI for using the AI tool and capabilities? I think you're still one of those early entrance into the mortgage space with a very defined tool. So I think you're expanding a little bit more on what problem you saw in the industry and then how you solved it with AI in order to provide that precision efficiency. Would be a great example of how people should be looking at different tools that would fit in the ecosystem. So can you tell a little bit more about the story, what problem you saw, how you saw being able to solve that with AI, and then and how that fits in the overall ecosystem of lending?
Sure, no, absolutely. To start that story, I'll probably need to go a little bit further back before we started Prudent AI. So where I used to actually work at Ernst & Young, and I built a lot of the technology that EY was using to automate its own delivery service of audit. And one of the foundational pillars there was the ability to read documents and capture data and then make decisions on it digitally, as opposed to manually. I think that was foundational to what we were doing at Prudent AI, because when we started out, we were actually building a futuristic audit platform, and we were building software to read financial statements and documents and analyze them for that. And one of the challenges we had with our audit platform sometimes was that it was too good. So it was catching even the teeniest bit of noise in the documents, and that was not how the audit industry likes to work today. But the technology was phenomenal, and the mortgage lending industry loved it. We had like a great use case because they were processing high volume with high precision, and that's where the technology really shines. So as Prudent AI, we basically capture data from documents and also analyze them for lenders to make decisions. In the mortgage flow in general, what we try to do is to stay as far left as possible on the process, meaning as close to the earliest stage, typically pre-qualification. And if you're able to essentially get high precision data and clean data there, then right through the flow down to underwriting, securitization, all the way through, you have clean data. And that's fundamentally what we do.
That's fantastic. That bookends it just perfectly between telling the story where you saw the efficiency opportunities and and then how you can develop a tool that's really going to help, with that pull through, make sure that the accuracy in the data is there all the way through, all the way to post closing, then basically preparing it for sale and making sure that your accounting books are all lined up. I mean,
Yeah.
those are all very disparate systems within mortgage lenders typically, and so being able to capture that all, and drive that efficiency. And I think you guys layered in fraud check, right, as part of
Yeah.
your
Yes.
benefits.
Yeah, absolutely. Right. One of the foundations of even good AI is actually the same foundation for good underwriting and good mortgage lending as well, which is to get good, clean data right up front. And fraud check is almost fundamental to that. While we are looking at getting the data right and making initial decisions on it, we definitely don't want to go into a space where we say, no, the decision was right, but the data was bad, right? So
Yeah.
it's very important to do that. I think it's a key step in the flow.
That's good. The decision was right, but the data was bad. Another fantastic saying. Because I've been originating loans, in this industry. I started 30 some odd years ago, and we always said that the application was as good as the data. And then then I was meeting with the president of another technology company about 2 weeks ago, and she even highlighted. She was like, I've been working my whole career in the back end of this industry, and now that I'm looking at how the sausage is made, she's like, I'm shocked the amount of holes in the amount of data that probably isn't as pure as we thought it was over the last 20 years as we were looking at the back end data in packaging up loans and selling them. And she said there's just so many opportunities for purifying that data, and to think that major investment firms are making big multi-billion-dollar decisions and on purchase pools based on that poor data just kind of scared her a little. So I think again just brings relevance to your point that you got to have the right data to be able to make the right decisions. And just one of those other features that really stuck out to me, because we always struggled with bank statements, right? Trying to figure out how do we analyze these bank statements based on someone that's self-employed. And you've been able to automate and basically drive an efficiency factor with bank statement analysis. Can you expand a little bit more about how AI is being leveraged from that standpoint to quickly identify trends in what you're seeing in a bank statement as it gets pushed through your system?
Sure, absolutely. When we started out, I think the first opportunity we got in the mortgage industry was with bank statements. We thought it was reasonably complicated, and I mean that in a good way, because I think the complexity is what allows technology to really shine and show its efficiency. And bank statements were a great place for us to start. So we actually have essentially two engines as part of our product. One which captures data from bank statements, what used to be called OCR, but we use AI and computer vision is the technology we use for that. And we grab data off the statements. And the second engine is where all the analysis and fraud checks and assimilation of the data is done as well, so that it's now actionable and decisionable. So the product is essentially a combination of both these engines firing together.
Oh, that's fantastic. I mean, you're really giving it's not just the analysis and outcome that says, pass or fail on the DTI based on the bank statement. It also gives you the prescriptive recommendation of where you probably need to drill a little bit deeper. So, I mean, that's
Yeah,
true
yeah,
power of AI being leveraged right there.
sure. In fact, one of the key things that we've seen and foundational to our success is how people get the AI experience. I think the key is for the users to feel in control. You do not want it to be a black box even if it's getting decisions right, you're always worried about what if it doesn't. So we have we put the user in control the whole way. And today, underwriters like the fact that the machine can do all the work, but they are still in control. They are still the boss, right? And that's very important. It's almost the, I mean, I like speaking in metaphors, but this is one of my favorites, right? It's like a self-driving car. You still want to be the car can drive itself, but you would still want to be at the wheel, and you would still want to know that you're making the merge correct, right? You're not going to trust the car to do that.
That's true. That's a very good metaphor. Excellent. Thank you, putting that in perspective, Jay. That was good. Well, hey, just out of respect for time and our listeners, I want to thank you, Jay, so much for shedding some light on, not only where is AI and as in general within the world itself, but also then kind of zooming in on the industry and then how tools like a Prudent AI actually deliver the effective utilization of AI to drive efficiencies in a very comprehensive lending manufacturing process. So, been incredibly insightful and educational. I know a lot of listeners are really going to benefit from this time together today. I want to thank you. Just a great discussion all around. Critically important insight and perspective. As we discussed, AI just isn't going away. Lenders, you'll
Uh,
need to embrace the advanced technology or you'll get left behind, right, Jay?
Absolutely, absolutely, right. It's not AI versus lenders. It is lenders with AI versus lenders without AI. And one of the things that we've been very happy to see, it's almost, I would love to do almost a podcast on all our clients' success stories. I think some of them have done phenomenal things in the last couple of years that we've been working with them in terms of the output and efficiency. What they've been able to do with our technology, I think, is something that we are very proud of. I think we love how easily they're able to absorb this efficiency and create something super valuable.
Oh, you know what? You teed it up just perfectly. So that'll be our next podcast. Jay, I'm going to commit to that. We'll do that over the next year here. Do several podcasts where you can share a case study. I think that's a brilliant idea. So let's plan on doing that. Um, Folks, I want to again say, thanks so much for Jay jumping in the shark cage today to answer some questions and give us some great baseline for how we need to be thinking about AI in the mortgage banking industry. Folks, don't hesitate to learn more about what our preferred partner Prudent AI is doing and how Jay and his team with Sari or his co-founder are helping the industry. You can check out their website by going to www.prudent.ai. Uh, Thanks again, Jay. Appreciate your time.
Sure. Thanks, Keith.
All
Love the
right.
conversation.
Cheers. Until next time, this has been another exciting episode in the Shark Cage. Wish you all the best. Have a great day.
Thank you for joining us in the Shark Cage. To be a guest on a future episode, send an email to info@blackfin-group.com. To find out more about the show or the information provided in this episode, visit BlackFin Group online at www.blackfin-group.com.